Welcome to the Deep Dive. So we've got this stack of material in front of us, articles, notes, lots of Bloomberg insights, it seems.
That's right.
And it looks like we're trying to connect the dots between, well, everything. Tech, AI, market moves, geopolitics. That's all tangled together.
Exactly. And that's the mission today, really, to
Yeah.
sift through all this, pull out the key nuggets, the important stuff, so you can get a clear picture quickly.
Okay, let's do it, because there's a lot here.
Uh,
AI growth, definitely, but also how it's actually being used. Supply chain pressures from global tensions, and even some surprising bits about how big organizations like governments work, or maybe don't work so well.
yeah, lots to unpack. Let's maybe kick off with the markets. That seemed like a big focus in the sources, tech stocks especially.
Right. The S&P 500 recovery after that April dip,
Hmm.
the sources are saying tech giants really drove that, outperforming for, 8 weeks straight.
Yeah, 8 weeks. And it wasn't just like a general lift. Specific companies made a huge difference. NVIDIA alone apparently accounted for 12% of the S&P's rebound since April. That's massive.
Wow. And Microsoft was mentioned too, and Broadcom adding another 5%.
And the driver. Pretty clear from the material, just ravenous AI demand. That's the word that kept popping up.
Okay.
Yeah, even NVIDIA's CEO was quoted saying the demand on the compute side of things is like way stronger than they even thought it would be.
So that huge demand for compute power, it's not just about current sales then. It's changing future plans.
Absolutely. It's pushing companies to seriously ramp up their capital spending. We saw that trend in the Q1 earnings, and the sources suggest that's not slowing down. Those higher spending plans look like they're here to stay for a while.
Okay, and Broadcom fits into this how? You mentioned them earlier.
Right. Broadcom's a good example. They're looking at strong growth, maybe 20% top line for the April quarter. Their business is roughly 60% semiconductors.
Which catches that AI wave directly.
Exactly. And the other 40% is software. So the semis are driving that raw demand, but the software side is really helping with profitability and, growth as well.
But when stocks run up this fast, people always ask about valuations, right? Are they getting too expensive?
Yeah, definitely. The sources tackled that. They admit valuations aren't, let's say, as attractive as a few weeks back. NVIDIA, for example, apparently went from trading around maybe 17, 18 times its 2026 expected earnings to now closer to 24, 25 times. So a jump.
Right.
But the argument is when you look at the growth picture, which seems stronger and clearer now, maybe those valuations are still, reasonable, or at least that's the perspective some analysts are putting forward. Visibility is improving, they say.
Got it. And there was also a quick mention, something about a potential tariff investigation, Section 232.
Yeah, just a brief note. An ongoing semiconductor investigation that could result in permanent tariffs, maybe 25%. Something to watch. Could definitely impact hardware costs down the line.
Okay. So that's the market reacting. Let's zoom in on the engine behind a lot of this.
Yeah,
The cloud providers. AWS came up a lot.
a huge amount. Yeah, Amazon's cloud division, AWS, their AI business is already, according to the sources, at a multi-billion-dollar run rate.
Multi-billion.
Already. But the really interesting part is the perspective from their CEO. They see this as just the very earliest stages. The quote was something like, AI will transform every single business, every single industry, and really every single job.
Wow. So that multi-billion-dollar run rate is just the starting pistol, basically.
That's the idea. And the kind of AI work happening is changing too. Initially, it was all about training these huge models. That takes massive power.
Right.
But now the sources say usage is just exploding as AI gets built into things. And the prediction is the vast majority of the work, maybe 80, 90% over time, will be inference.
Inference. Can you unpack that a bit in this context?
Sure. Inference is basically using the trained AI model to do something useful in an application. So instead of training, it's the AI working. The sources described it as becoming a core building block in software, like compute or storage are now. It just gets seamlessly integrated.
So less like a separate AI tool, more like AI features just appearing inside the apps we use.
Exactly that. And to handle all this, AWS has a strategy. They offer choice supporting NVIDIA's chips, obviously. They mentioned P6 instances are available, and they're ramping up capacity like crazy. But they're also investing really heavily in their own custom chips.
Ah, okay. That leads to that project thing, right?
Yeah, interesting name. It's this big collaboration between Amazon and Anthropic. They're building one of the biggest compute clusters ever.
Purpose-built for what?
Specifically to train Anthropic's next-gen Claude AI models, and they're using Amazon's own Trainium 2 chips to do it.
And how good are these Trainium chips?
Apparently, quite good. The material highlighted Trainium 2's performance, saying it really pushes the envelope on cost performance and scale, and that cost part is key.
Because AI is still seen as too pricey.
Exactly. That came up explicitly. AI is still too expensive for many uses, so making training and inference cheaper is absolutely critical for adoption. That's why they're innovating at the chip level.
Makes sense. And there was a small point about tokens, how we measure AI work.
Yeah, just a nuance. Tokens are often used, especially for text AI, but they don't tell the whole story. A model might be thinking or processing for a long time before it actually outputs any tokens. So work done isn't just about token count.
Hmm, interesting. And AWS is just building data centers everywhere too, right?
Yeah.
Mexico, Chile.
Yep, global expansion continues. New regions like Mexico and Chile were mentioned, plus strategic stuff like a dedicated sovereign cloud for the EU for sensitive data.
Okay, so beyond the massive cloud infrastructure, what about specific AI applications? Where is this tech actually showing up?
Well, one really interesting example from the sources was this potential deal brewing between Samsung and Perplexity AI.
Perplexity, the AI search engine.
That's the one. Samsung is reportedly close to not just investing, but actually integrating Perplexity's AI search deep into their phones and devices,
Mhm.
like preloading the app, maybe even building it into the browser or OS.
Whoa, that would be huge for Perplexity, a big layup, as the source called it, given their valuation was mentioned around $14 billion.
Absolutely. And it definitely puts pressure on Google, right? Google pays a fortune to be the default search on Samsung devices.
Yeah.
Perplexity was also praised for its great design and just how well it packages up the AI models.
Interesting. And what about the New York tech scene? That got some attention too.
Yeah, Painted is really booming. A $700 billion industry, 25,000 startups, and apparently it's the #1 spot for college grads now.
More jobs than finance since the pandemic.
10 times more new tech jobs than finance jobs in NYC since the pandemic, according to the material. That's a massive shift.
So what's driving that? Is it just general tech growth?
Partly, but the sources highlighted NY's specific strength. It's really good at figuring out how to use new tech, like AI, in all the industries that are already strong there: finance, media, healthcare.
Applying the tech.
Exactly. They mentioned examples like Replit for coding, Runway for creative AI, Ramp in fintech, Maven in digital health. Plus, OpenAI is apparently growing its presence there, too.
Okay, and looking even further ahead, humanoid robots.
Yeah.
Seriously.
Seriously, China in particular has big ambitions here, according to the sources. Not just factories, but retail, elder care, maybe even in homes. And both the US and China are reportedly testing them for military uses too.
The numbers projected were just wild, though. $7 trillion market by 2050, 650 million robots.
Staggering numbers. It suggests there are big strategic goals behind this, not just money. China's apparently investing $140 billion over 2 decades.
But it's not exactly smooth sailing yet, is it? That robot half marathon story?
Huh. Yeah, the sources mention that. A humanoid half marathon where apparently very few robots actually finished. It kind of grounds the hype, right? Shows there's still a very long way to go, despite the ambition.
Definitely. Okay, so we have all this amazing tech progress, huge market potential.
Mm.
But it's all happening against a pretty tense global backdrop, isn't it? The US-China stuff.
Yeah, that was a major thread. The sources were pretty blunt. Any sort of honeymoon or easing of tensions after recent talks, that's shattered. And tech is right in the middle of it.
How so? What are the friction points?
Well, the U.S. export controls on high-end AI chips and the equipment to make them. China sees those as a huge problem. And the fact that China's reacting so strongly, the sources suggest, shows that the controls are actually, well, effective and painful.
And China's hitting back with rare earths.
Exactly. China dominates the supply of rare earth minerals essential for everything from EVs to defense tech. Their export controls are now hurting U.S. industries, particularly auto and defense manufacturers mentioned in the material. This whole rare earth dependency was called a gray rhino.
A gray rhino.
Yeah, like a big, obvious threat we've known about for ages but haven't really dealt with properly at scale.
So it's leverage versus counter leverage.
Pretty much. China is using rare earths as a coercive instrument, as the sources put it, and the U.S. Commerce Department is apparently doubling down on its tech export controls. The feeling conveyed was that neither side plans to blink anytime soon.
And this connects to worries about Taiwan, right? That came up too.
Directly. There was a stark warning cited about a potential Taiwan crisis being imminent.
Imminent.
Wow. And the link to the global economy is critical. China has this habit of doing big military drills with basically no warning. That shrinks the reaction time for markets, for everyone. The big fear highlighted is a supply chain disrupting crisis around Taiwan, stopping those vital chips from getting out for weeks, maybe longer.
Uh,
Most advanced chips are made there.
That's sobering. Okay, so in this messy environment, how are individual companies coping? Tesla was discussed quite a bit.
Yeah, Tesla. The sources noted they're feeling some pressure sales down in places like France, hitting a 3-year low, apparently.
But shareholders seemed happy Musk is focusing more on Tesla again.
That was the vibe reported. After time spent on other ventures, his renewed focus was described as music to the ears of shareholders.
So what's the big picture for Tesla's value, according to these sources? It's not just cars anymore.
Definitely not. The core drivers identified for future value, the path to maybe $2 trillion from around $1 trillion now, are autonomous tech, full self-driving, and robotics, specifically the Optimus robot.
2 trillion.
Yeah.
And potentially in the next 12, 18 months. That sounds ambitious.
Yeah, one projection mentioned that time frame, though was noted some see even that as conservative.
And how do they stack up against competitors like Waymo in autonomous driving?
Well, Waymo obviously had a head start, but the argument presented in the material is that Tesla's advantage is sheer global scale. Their existing fleet, maybe 10 million cars next year, is just this massive data gathering machine.
With training the AI.
Exactly, which fuels their plans for cybercabs and getting more people using FSD. There's apparently a key event coming up in Austin in June related to this.
And China is crucial for Tesla too, isn't it?
Hugely important. Over 40% of their deliveries and supply chain involve China. So the sources pointed out that Musk's relationship in Beijing is a significant asset, especially with those U.S.-China trade tensions boiling.
And Optimus, the robot, that scene is potentially even bigger.
That was definitely a perspective in the sources that the robotic side Optimus could eventually be even more valuable than the entire auto autonomous business, and that investors are currently massively underestimating its potential.
Okay. Wow. Now, shifting gears completely, there's this really unusual section drawing on work related to some government efficiency project nicknamed Daijoji.
Yeah, that was fascinating. Really offered a glimpse into just how incredibly hard it is to make large bureaucratic organizations efficient.
How hard?
Well, the comparison used was colonizing Mars. And someone apparently argued Mars might even be harder, depending on the metric. That kind of gives you a sense of the scale of the difficulty.
Seriously, colonizing Mars.
That was the analogy used in the source material, yeah. And they had concrete examples of the waste they found while aiming for like $1 trillion in savings. One stood out, finding millions of software licenses with 0 people using them.
Millions of licenses unused.
Millions, yeah, just sitting there being paid for.
What causes that kind of thing?
The sources described it using phrases like the banal evil of bureaucracy and its largely uncaring nature. It's systemic.
And there was a Milton Friedman quote mentioned.
Yeah, it seemed very relevant. Money is spent most poorly when it is someone else's money being spent on people you don't know.
Captures that lack of direct accountability,
Right, so if someone tries to stop the waste, they run into what the sources called the complaint minimization dynamic. Basically, trying to cut wasteful spending causes complaints, creates hassle for managers. So often the manager decides it's just not worth the trouble and approves the spending anyway to avoid the headache.
So the waste just continues because it's easier than stopping it.
That's the dynamic described. And apparently, the DOGE project itself sometimes got unfairly blamed for cuts it had nothing to do with, became a kind of whipping boy or bogeyman. It really highlights these deep hidden barriers to efficiency.
That's quite a detour, but really interesting. Did the sources touch on anything else briefly? Tariffs, debt.
Yeah, just quick mentions of related discussions, things like the importance of presidential power over tariffs, different viewpoints on the debt ceiling, and this contrast between, say, funding big universities versus funding trade schools needed to actually build things like rockets and robots. Just reporting different perspectives out there.
Okay, so let's try and pull this all together. What's the big picture from this deep dive?
Well, it seems clear the AI revolution is genuinely here and accelerating. It's driving huge market activity, reshaping industries from the cloud infrastructure with AWS down to specific apps and even potentially humanoid robots.
And it's a big but. This isn't happening in isolation. It's tangled up with major geopolitical risks.
Absolutely. The U.S.-China tension is central, especially around who controls the key tech, the chips, the rare earths. And that Taiwan situation casts a really long shadow, threatening massive supply chain disruption.
And companies like Tesla are trying to navigate all of this, placing huge bets on future tech like autonomy and robotics. While at the same time, we get these reminders, like from the government efficiency example, about just how hard it is to manage complexity at scale.
Right. It's this mix of incredible technological potential and very real, very complex global and organizational challenges.
So why does this matter to you, listening? Because this intersection, tech, markets, geopolitics, it's not abstract. It's shaping the economy you live in, the innovation pipeline, international relations, and probably eventually aspects of your daily life.
So maybe a final thought to leave you with, building on all this. Given how fast AI is moving and how much geopolitical friction is now centered on controlling the tech and the resources needed for it, how do you think access to those essentials, the chips, the minerals, the data centers, will actually be decided in the years ahead? And what does that competition mean for who gets to innovate and where the world goes next?